All right, I welcome us once again to this set as we continue with our learning. What we have next on our table is to continue with what is a pip. What is a pip? As it is a cluster, let us take off what we don't need and then let us make progress. All right, so what is a pip and what is a pet? Okay, so the first thing I like us to understand about the forex industry and most of the currencies we'll be trading is that most currencies are often quoted in four decimal places. Four decimal places. Yeah, when you check here, you would see five. This is GBP USD, and the price is currently at 1.23392, right? But in the real sense, when you check it from MT4, I'm trying to open my MT4 over here. When you check it from MT4 itself, what you will see is 1.2340 right now, and then raised to power. Like if you are checking it through MT4, you realize that it is four decimal place and then one tiny number on top. So you see that tiny number that is on top, that is called a pipette. That tiny number that is on top here on MT4 is what is here on trading view as a O number. You get what I'm trying to say? I think I have MT4 here open here. Okay, even over here, so excuse me. Even over here, it is not written as a O number. And it is not written as a raised to power, rather, it is written as a O number. However, that is what I want us to get, that currencies are usually coded in four decimal places. That fifth one, that is in the form of raised to power, is what is called a pipette. Now, what is a pip? As usual, let us consult with our friend and partner. What is pips in trading? All right. You see it. So pip is a tool of measurement. This one long ago. A pip or percentage in points, as you've read on baby pips, of course, is a measurement of this one is just a thought like, all right, this is it here. A pip is the smallest price change that a currency can make in the forex market. You get the smallest price change that a currency can make in the forex market. That is it. Meaning that since prices are always fluctuating from one pricing level to another pricing level, actually that fluctuation is calculated in pips. Are we together? And how do we begin the calculation from? We begin the calculation from the fourth decimal place. For those of us who may not know what fourth decimal place is, let me just quickly run us through it. Because even me myself, it took me a long time before I knew the difference between a decimal place and a significant number. Is this secondary school now, primary school mathematics? So this is one. Are we following me? This is points. In mathematics, it is called decimal place, right? Good. So let's say we have three after the points. That first three is called the first decimal place, followed by 7, which is the second number. It is called the second decimal place. Let's say followed by 6, it is called, that 6 will be the third decimal place because that's the third number after the decimal point. Do you get it? And then let's say 4. So that 4, don't use 4, so it doesn't rhyme. And then maybe you get confused when another number is there. Let's use 1. All right, good. So the position of that 1 after that decimal point is 4. So that 1 is on the fourth decimal place. Do you get what I'm trying to say now? So pips are calculated from the fourth decimal place. Remember what I said, that last number, that is like number 5, maybe the fifth decimal place. When you check it on MT4 itself now, it is raised to power. It is here that they wrote it as a whole number. And that's because in the real sense, that last number is a pipette. So when we want to count the change in price of any assets according to pips, it always starts from that fourth decimal place. That is what a pip is. So take, for example, let us ignore the current price of GBP USD. Let's assume that the current price of GBP USD is 1.3761. And let's say now GBP USD wants to increase by 1 pip. That would mean that we are adding 1 to this last 1 year. You know, we have 1.363761. So we'll be adding 1 to that 1. And remember, we said increasing. So that will be 1 plus that 1. That will be 2. So let's assume that this is a current active market. And GBP USD moved from 1.3761 to 1.3762. What we will say is that GBP USD has increased by 1 pip. And when it comes to decrease too, remember it was at 1.3761. So for decrease now, it will be 1.3761 minus that 1. We start from the fourth decimal place. What will now be there is 0. So let's say that a few minutes ago, GBP USD was at 1.3761, and now it is at 1.3760. What has happened to GBP USD? GBP USD has decreased by 1 pip. So what is a pipette? A pipette is what makes up a pip. Just like, how did I take talk about this one now? Maybe like 1,000, I hope I don't make a mistake. Maybe like 1,000 centimeter, no, 1,000 meter, 100 meter make 1 centimeter. I hope I'm correct. And then 1,000 meter makes 1 kilometer, you get. So 10 pipettes makes a pip. It's just like, oh, I think the best illustration is actually like seconds and minutes. So this pipettes, currently right now, we can see that the price is 1.23439 is at 28. The current price now at this part. That last number is the pipettes. So when it moves from 0, 1, 2, 3, 4, 5, 6, 7, 8, 9, then it jumps to the pip. You know, like seconds and minutes. 60 seconds make 1 minute. So 10 pipettes make 1 pip. It is important that you know this because by the time you begin to, take trades, there's even an assignment after this one that you should calculate the pip value of certain classes of assets and, so you can understand how it is. And I'm so sure that if you've gone through baby pips before, it should be easier. I'm just putting tangible explanation to what you've read online already. So let us come back to our virtual example. So let's not even say that currently, GBP USD is at 1.3760, but it will increase by 15 pips. How are we going to do that? Then we add that 15 pips to 1.3760 from the back. Like we have 100 tens and minutes. So this one, it is from the back. So that will be what? 1.3760 plus that 15 at the last part. At the last part. Let me see whether I can make it to make sense here. Okay. So it will be 0.0015. You get it. And then what will be the answer? 1.3775. Do you get it? So we woke up this morning, and when the market opened for GBP USD, it opened at 1.3760. But the market kept increasing, and currently the market has gotten to 1.3775. Find the difference. First of all, 1.3775 is greater than 1.3760, right? And then the difference is actually 15. not 0.0015 in the terminology of pips. So that means that the market has increased by 15 pips today. And let's also assume that the market opened at, let's now pick a different number entirely. Let's say 1.3, no, 1.8, no, 12769. Let's now add that last number to make it simple. So to increase by 15 pips, we'll start the calculation from this 6. So it will be this 76 minus 15, not this 9. Do you get it? So what that will mean is that 0.00150, because that last one is a pipette. So far it is at 9. At best, it's just there. Just there. It's just a pipette. So by the time this 9 carries one more pipette to make it 10. So instead of 10, what we have here will now be 70. Do you get it? But since what we are dealing with is pips, let's leave it that way. So what will be the solution over here now? It has decreased by 15 pips. So the answer will be 1, decrease, so not increase. 1.12, 7 minus 1, that's 6. And 6 minus 5, that's 1, 9. So the difference between the opening price of GBP USD and where it is right now, we can see the price has reduced. Oh, what happened? Come back. Oh boy. Oh, I didn't write the text. But according to the example, we can see that the price reduced here. So that is a decrease by 15 pips from Euro USD. Let's go into the chart to have some example. Now, it is in the case of GBP USD that you would see, maybe 1 point. Euro USD, you see 1 point. When you come to assets like, let's say, AUD card, you may see 0 points. It is still the same principle. It starts from the fourth decimal place. Do you get it? When you come to assets like USD CHF, you still see 0 points. Do you get it? The fact that that one is 1 point and this one is 0 points doesn't change anything. The calculation for pips still starts from the fourth decimal place, either to increase or to decrease. So let us take a chart example from here. This is a 1 hour time frame. Looking at it here, it's a 1 hour time frame. This is a 1 hour candlestick. And let us look at the eye. Remember the values here: open, high, low, close, OHLC. So let's deal with the open. The open is 0.90659. Let's write that down. 0.90659. That was where the market opened on this particular 1 hour from 12 p.m. So this particular candle opens by 12 and closes by 1. It takes 1 hour to form. The one that forms on 4 hour 2 opens by 12 and closes by 4. The next one opens by 4, closes by 8. The next one opens by 8, closes by 12. And then that's how the multiple continues. Do you get that example? So this one opens every 1 hour and close after 1 hour. And the one on the 4 hour opens after every 4 hour and closes after every 4 hour. The one on the daily time frame opens after every 4 hour, every 24 hours rather, and closes after 24 hours. That's the way it works. So the close is 0.90182. 0.90182. So even just looking at it mathematically, which one is lower, the open or the close? The close is lower. What's the close? 0.90182. Lower than 0.90659. So in this case, when we want to find the pips difference between the open and the close, since it has 0.90 in common, we can just ignore those ones and pick 659 minus 182. Don't forget that that 9 and that 2, they are pipettes. But in this situation, we'll still have to include it. Just follow the example. You will get it. So 659 minus 182, that's 477. However, remember that last 7 will be the pipettes. Do you get it? That last 7 in this example will now be the pipettes. Let's do the mathematical examples together on the chart so we can get it. So minus, yeah? And then what's the answer? So 9 minus 2. This first 9 here, minus 2. We have 7. Let's move forward. 5 minus 8. They say it did not go. So we'll borrow 1, right? So that's 15. 15 minus 8, that's 7. What do we have here? We have 4, yeah? 4 minus, we have 5 rather. 5 minus 1, we have 4. And then we have 0. And then we have 9. And then we have dots. And then we have, no. And then we have 0. And then we have 0. Remember that PEEP starts counting from the 4th decimal place. So meaning that, where's the 4th decimal place? 1, 2, 3, 4. So this last one is the pipette. So what that means is that this 1 hour candle on USD CHF, from the open to the close, the market sold. And how much did the market move? The market moved by 47.7 pips. You rarely hear anybody say anything like 47.7 pipettes. At best, what you hear someone say is maybe 48 pips. They round it up, or 47 pips. But do you get the idea? Do you get the calculation? That's how it works. The calculation starts from the 4th decimal place. However, there are some guys whose their own calculation is now different, which is the Japanese peers. You must have seen that on baby pips too. So for the Japanese pairs, their own starts from the 2nd decimal place. It's just as simple, just as the one we just saw. You can see that this one has only 3 figures after the decimal point. But just like the one we just checked, the last number, which is the 3rd decimal place in this case, but for other assets, it is the 5th decimal place. That last number in this case also is the pipette. So the calculation starts from the 2nd decimal place. What you should just know at the back of your mind is that for every asset, the last number, either for every currency pair rather, the last number is often the pipette. So the counting of pips starts from the next number. Do you get it? Of which for Japanese pairs, it is from the 2nd decimal place, and then for other pairs, it is from the 4th decimal place. So for GBP USD now, take for example, the market is currently at 158.41. Let's just take that particular example, 158.41. So if you say the market wants to increase by 10 pips, all we have to do is to add that 10 to 41. Sure, you get it. So that will be 0.10, which is 10 in this case. And what will be the answer? 158.51. But in the case whereby we now want to add 100 pips, this is where it will start from. This is 10, right? This is where it will now be. Do you get it? If you don't get it, you can ask question, but it's simple mathematics. 100 tens units. Sure, you get. And when you want to reduce to, let's say, share it is increasing. This time around, it wants to drop by 100 pip. You've included the 100 pip. So what would the answer be? The answer will be, this time around will be what? 1 minus 1. 1 minus 0, that's 0. 5 minus 0, that's 0. 8 minus 1, that's 7.41. Do you get it? It's that simple. You just need to know. And like I said earlier, for every pair, the last number is insignificant as it were. That's the pipettes. So 10 pipettes makes 1 pip. So for example, the market is at 158.41. So let's say that the pipette is 0 now, like we saw it before we picked the example. So when the pipette counts from 0, 1, 2, 3, 4, 5, 6, 7, 8, 9, then this one will change to 0.42. Do you get it? So let's take much more dicey examples now. So the market is currently at 158.41 here, and the market is to reduce by, let's say, 32 pips. No, let's say 29 pips. It's just simple. So you put that 29 under the 41. It's just as simple. With time, you know how to do it off your hand. It's just as simple as saying 41 minus 29, because this is a tens number. So you're just dealing with 41 and 29 here. So that would be 41 minus 29. Since the 158 is a common factor, in that case, what would be the answer? That would be 158.12. What that simply means is that the market decreased by what? 29 pips. And in a scenario whereby the market is at 158.41 and it increased by 445 pips. Now, remember, this is 100, this is units, tens, and 100. Do you get it? So what that one would then be will be 0, 0, 4, 4, 0.42. Do you get it? It's just as simple. Don't get it confused as saying 841 minus 442. No, we said increase now, yeah? So that would be 841 plus 442. We have 1,000. Okay, don't let me bring mastery into this so you don't get confused. So let's just say, now that will be, we've added the 400 pips already now. You know how we got to this place here. So that 158.41 plus 4 points. Or if you want to be dogged, say 0, 0. But you won't get that 0, 0, 4.42. So what will be the answer? This time around, it's a plus here. So the answer will be what? 162.83. So that means that USDJPY increased by what? 442 pips. So that's how pips is calculated in the Forex market for every currency pair. For every other currency pair apart from Japanese pairs, it starts from the fourth decimal place. But for the Japanese pairs, it starts from the second decimal place, putting it in mind that the last decimal number for each of them is pipettes, and it doesn't count when we are counting pips. You rarely hear people say that, oh, the market moved by 100 pips, 2 pipettes. It's rare. Or you can just say 100 pips, 50 pips, 30 pips, 48 pips, on and on. So the reason why it is important to just notice is because the market movement is calculated in pips. So you can begin to hear things like, oh, for GBP USD in the year 2024, the market moved upwards by 8,000 pips. What that simply means is that all you need to know is the opening price, add 8,000 to it, and then you can know the closing price by yourself, even without looking at the charts. So that is what a pip is, and that is how to calculate pips in the Forex markets. Let us move on to our next lesson, which is bid and ask price. Okay, so what are bid and ask price? When you open your MT4 or even MT5, depending on whichever one you sign up on, you always see two different prices here. The first one is the bid, and then the second one is the ask. The first is the bid, and the second is the ask. Bid and ask. So, do you get it? It's that's just the way it is in this industry. Yeah. When you check very well, the difference isn't usually that much or significant. But the fact is that just like naira to dollar, for whoever has transacted maybe at the bank or with any bureau de change, you know that when you buy dollar, let's say you have naira now, and you want to go and buy dollar, you can buy it for 1510. If you bring that same dollar back at that same instance and say you want to sell it, they will never sell it to you for 1510. Never. At best, it will be 1500. So that is bid and ask price. Why is it important? It is important because you see that 10, that is now the difference between the 15 and 1510 is what we call spread. That's the profit of your broker. Remember, we are doing exchange and buying and selling of currency. So take, for example, the person that is doing bureau de change. How is he making profits? He's simply making profits by that little difference. And when you check your MT4, okay, I have it here. Let me see if I can include spread. Okay, awesome, beautiful. So you can see it. This is the spread here in this column. So the spread sometimes is often constant. So for GBP JPY, it is 15. For GBP USD, it is 8. For, okay, these are assets that you can't trade. It is not every GBP USD that you can also trade. There are some that you can't trade even on your broker's platform. Okay, so USD JPY is 13. Euro USDR is 6. USD CHF is 6. So this 6, I think, is 0.6 pip, not up to 1 pip. So what we are saying simply is your spread is the difference between the bid and ask price. What is the bid price? The bid price is the price that, let's look at it, represents the price at which your broker is willing to buy the base currency. And the ask is the price at which they are willing to sell to you. So just like you go to the bureau de change or the exchange, the price that they will buy from you is different from the price that they will sell from you. So that's just a typical example of the bid and ask price. Now, how does it come to play in the Forex markets? I want to show us something. So F8, I usually hide my own because I often don't use them. Should ask line. Why it is not shown? Ah, I don't go press nonsense. Let's check if we can see it on trading view. Okay, bid and ask. So this is it. I hid my own because I really need them. So can you see the difference may not so it is on 1 minute that you can see it very well. These are two different prices. What that means is that you see when you want to buy GBP USD, for example, when you want to buy, they will sell to you at this price that is up. And when you want to sell, they will sell to you at this price that is down. That's just the simplest way to understand it. Now, when you are buying, remember that they are selling to you at this price that is, no, that's a mistake. I'm sorry, please. When you are buying, they will sell to you, your broker will sell to you at this, hey, Chineke, please don't let me confuse you guys. But the most important thing to take note is that when you are buying, your market order will be filled at the ask price, but your trade will not be in profit until this price, the one below, goes above your entry. So that is why for those, if you've practiced trading before, you observe that the moment you first open a position, it is usually in negative first before it then maybe goes in blue, if it goes your way or not. What is responsible for that is PIP. So that minute difference or that distance that you are seeing is how your own broker makes profits when they are selling to you or buying from you. The same way if you come to me now and you bring 1.4 million naira now and say you want to buy $1,000, I'll sell it to you at 1.4. But if you bring that $1,000 back and say you want to sell it, I won't sell it to you at 1.4. I'll sell it at maybe 1,390. So that's a 10,000 difference already. That is my own profit for helping you participate in that exchange. So on the chart, it is represented as PIP. So when you want to buy, they will sell to you at this upper price, meaning that once you open a trade, do I have that demo account logged in here? I don't. Well, let's try to see. Okay, let us log it in. Let's see if I can find the details. Okay, 4141. Oops. 4141 5015. And then what's the password? The password is, if I'm correct, demo tests, and then start 1, 2, 3, 4. So let's log in. Is it logged in? Oh, this was that buy that we initiated earlier when we were taking the example. We are waiting for the network to update. I just wanted to, oh, this is even a zero spread account. Aha. Sorry. You may not even see the example I'm trying to show you because that's where we are trying to talk about different type of accounts, meaning that there are accounts you will now see. Because the thing about spread is when you begin to trade, spread can be so dicey that the price can come down, maybe to your TP, and it will not fill you in simply because of what? Simply because of spread. Or it can buy, get to your take profits, touch it. But remember what we are talking about. When you are buying, your focus is on this blue line. And when you are selling, your focus is on that red line. If you are selling, if you enter a sell position and this red line has not come below your entry, you won't enter profits. This red line has not come below your entry, you will enter profits. And if you are buying and this blue line has not gone above your entry, you won't enter profits. So when you are operating a zero spread account, this thing is completely eliminated. The market fills you in at whatever price you want to buy or sell. But how will the broker still make profit of you? That is when they use commission. Just like you can now see, you can see the commission here. So the commission on this trade is $1.2. But if you remember the first example for the real account that has a premium spread, is it premium or pro? I can't remember. But that one means that the spread is very tiny. That is why the minimum account balance is, I think, $250 because they are trying to live. Coco is that they want to make money. You get the idea. So that is what spread is. Spread is the difference between your bid and ask price. And that is how your broker makes profits from providing a service to you. So at the end of the day, whether your trade ends in a profit or in a loss, your trader, I said your trader, whether your trade ends in a profit or a loss, your broker makes profits from your transaction. So that is what spread is and how it works. All right, so what is equity, balance, margin, and swap? Now, to be very honest with you, you also see a place where maybe baby peeps took in their time to explain all these things. I've never had to use margin and swap at the end of the day. Okay, what is swap? Swap is the fee that your broker charges you for holding a position overnight. So some broker charge swap, some don't. So what that means is that, take for example, you can be on a trade and maybe when you enter the next day, you hold the trade into the next day. Why they charge that, I honestly don't know. but they are also just trying to make money for the service they are rendering, right? When you hold that trade to the next day, when the next day come, maybe your profits can be, let's say, $54.8. But you can see that what is reading is maybe $54.6. That means that they've removed 20 cents as their swap. So swap is just that fee that your broker charge you for holding a position overnight. However, what's the difference between equity and balance? Let me bring this up. Maybe we can see it. All right, awesome. So when you check here, you see that we have balance, we have equity, we have margin and the likes. You see this margin, provided you trade with risk management, which I will still teach you. I really don't think I'm bothered with what it means or what it does not mean. Because in the real sense, Coco, what concerns you is your balance and your equity. So balance is what you have in your account. So take, for example, this is a trade here. I currently have a floating profit. This is profit. If it were to be a loss, we also call it floating loss. What does floating means? It's still floating. Until I close this trade, this 39 points or this $40 profit is not mine yet. So while a trade is going on, what I have is my equity. Equity will be showing me what I will have when I close the trade. So then when I close the trade, like I want to do now, let me close it. Then everything goes to my balance. Do you get it? So equity is like your proposed balance while the trade is going on. Why balance is what you still have to yourself. Because this is a winning trade. That is why we saw 50.39 earlier. If it were to be a losing trade, and let's say maybe I'm currently losing like $100, while I will still have 5,000 here, if you can remember, what will be here will be 4,900. Because once I close the trade, my balance will remain 4,900. So balance is what I have before I opened the trade. Equity is what will reflect in my account after I've now closed the trade. So that is that about that. We are done with this edition or with this, should I say, episode as it were. So there's meant to be an assignment. Let me get your assignment out for you. All right, so here's your assignment. I was trying to copy it and paste it on trading view, but it wasn't coming out well. So it says identify. Oh, sorry, this is the wrong assignment. This is the assignment for the next phase. Please hold on for me. All right, so your assignment says go to the H4 time frame. H4 is 4 hours. When you come to your phone, how you see your time frame is that maybe I'll also make another video on how to maneuver through MT4 and MT5 on the phone. But when you just click, like you're inside MT4, once you just tap on the screen, you will see to bring out the time frame M1, M2, M1, M5, M15, M30. Those are the minutes time frame. H1, H4, those are the hourly time frame. D1 daily, W1 weekly, MN monthly. So the assignment is that you go to your 4-hour time frame and you pick 6 different random candles, 3 bullish, 3 bearish. Put the crosshair on them. What's crosshair? That thing that is like plus that is always running around the charts. For MT4, when you open MT4, I'm sure you've seen MT4 before. So you see the plus. So as you are moving the plus around also, you actually realize that the details of the candles are changing. So put the crosshair on them. As you have put the crosshair on it, take a screenshot of that particular candle. When you do, write out the open, high, low, and close value. And when you do that, write out the pip difference between the high and the low. Do you get it? So you are picking 6 different random candles on the 4-hour time frame. As you have picked the first one, 3 bullish, 3 bearish. As you have picked the first one, you put the crosshair on it. screenshot it, write out the value, then find the pip difference between the high and the low. Then you do that on the 4 hour. So repeat that same process on daily and weekly. What that means is that you go to daily time frame. Let's just make it daily, okay? Let's remove the weekly out of it. Let's just repeat that only on daily. So you also go to the daily time frame, pick 6 random candles, 3 buy candle, 3 sell candle, and then you put the crosshair, screenshots, write out their value, find out the pip difference between the high and the low. And that will be all for this session, guys. So take your learning seriously. I look forward to seeing you at the other side. Cheers.